All right, welcome to The Explainer. Today we're doing something a little different. We are going to conduct, essentially, a 50-year autopsy of our modern financial system. It was a radical experiment that completely changed the world, and then we're going to look forward to see how the legacy of that experiment is about to collide with the massive forces that are shaping our future.
Okay, let's just jump right in with this. This is a pretty stunning claim from a 2021 Deutsche Bank report. They called the last 50 years the most inflationary half-century in human history. Wow. That single sentence really sets the stage for just how dramatic this story actually is.
So, to really get why that quote is so important, we got to understand the main character of our story here, fiat money. You see, unlike money that's backed by gold, its value isn't tied to a physical thing. It's based purely 100% on trust in the government that issues it. And after 1971, for the first time in history, the entire global system started running on this one concept.
So here's our roadmap for today. First, we're going to travel back in time to the Great Unanchoring to see exactly how this all started. Then, we'll dig into the results of this 50-year experiment. After that, we pivot to the future to wrap our heads around something called the Polycrisis, before finally exploring how the world's two economic giants are gearing up to face their destinies.
Okay, so let's get into our first section, the Great Unanchoring. This is really the origin story of the financial world we all live in today. It's a story about a system that was designed for stability, but, as it turns out, had a fatal flaw hiding right in plain sight.
So right after World War II, the world created the Bretton Woods system, and it was all about stability. Other currencies were pegged to the dollar, and the dollar itself was pegged to gold. Simple enough. But you see the cracks start to form in the 1960s. Then came the bombshell moment in 1971, when President Nixon closed the gold window. He just severed the dollar's link to gold, and that was effectively the end of the system. By 1973, we were living in a completely new world.
So you might be asking, why did this seemingly stable system just fall apart? Well, the answer is this fascinating idea called Triffin's dilemma. Think of it like a paradox that was baked right into the system from day one. See, for the global economy to grow, the world needed more US dollars. But for the dollar to stay trustworthy, it had to be backed by a finite supply of gold. The US couldn't do both at the same time. It was an impossible situation.
And this wasn't just some abstract economic theory, right? In the 1960s, it blew up into a full-blown crisis. You had massive U.S. spending on the Vietnam War fueling inflation. You had our allies in Europe and Japan getting tired of America's exorbitant privilege. And you had currency speculators smelling blood in the water. The U.S. could have made some painful cuts at home to save the system, but it wasn't willing to. So the anchor was cut loose.
And just like that, the anchor was cut. Which brings us to Section 2. What actually happened? What were the results of this massive global experiment? When the entire world operates without a monetary anchor for half a century, what does that look like? Well, the data tells a pretty incredible story. Now this table, this really tells the whole story in just a few lines. Let's just break it down. In the fiat era, average inflation was way higher. US federal debt, it just exploded. And the frequency of major financial crises, you guessed it, markedly higher. The evidence shows a system with a built-in bias, a clear tendency towards more inflation, more debt, and a lot more instability.
And this chart right here, man, it just visualizes that debt explosion perfectly. Look at this. Without the hard discipline of gold, governments could run deficits with way fewer consequences. U.S. federal debt went from a totally manageable 35% of the economy in 1971 to over 120% today. That is just a staggering change.
And here's the really important thing to remember. This wasn't just about prices creeping up or debt slowly rising. The whole character of the financial system changed. The fiat era became defined by volatility. Think about it, the Asian financial crisis, the dot-com bust, the global financial crisis of 2008. These massive, systemic shocks became a recurring feature of our world on a scale that was just unimaginable under the old system.
Okay, so that's the last 50 years. But that legacy of high debt and instability, it's not going away. In fact, it's about to slam head-on into a whole new set of powerful, overlapping challenges. Some people are starting to call this convergence a polycrisis.
And you can think of these new forces as the four horsemen of the 21st century economy. It's a pretty powerful way to frame it. First, you have demographics, a global winter of aging populations. Second, the AI revolution, a technological disruption unlike anything we've ever seen. Third, the climate mandate, the massive, unavoidable cost of transitioning our energy systems. And finally, geopolitics, the end of hyperglobalization.
Any one of these is a huge challenge. Together, they create the Polycrisis.
So this new era, this Polycrisis, how are the two biggest players on the board, the United States and China, going to handle it? Because their challenges are absolutely immense, but, and this is key, they are completely different from one another.
This slide really lays it out perfectly. It's a tale of two very different crises. For the US, the big monster under the bed is fiscal dominance. Basically, the national debt getting so big it forces the Fed to print money to pay the bills instead of fighting inflation. For China, it's something else entirely: demographic collapse, a problem so severe it could stop their economic rise dead in its tracks.
And for the U.S., here's the number that should keep you up at night. The Congressional Budget Office projects federal debt will hit a staggering 156% of GDP by 2055. I mean, that's not just a big number, that's the kind of number that triggers a self-perpetuating debt spiral, where the debt grows way faster than the economy's ability to pay for it.
And if you think that's a shocking number, look at China's. The UN projects its population could fall by over 600 million people by the end of the century. That's a catastrophic loss of workers and consumers. It's an economic headwind that no modern economy has ever faced.
So, you look at these massive problems facing both the US and China, and you have to ask, what happens to the dollar? Well, it'll almost certainly stay the world's primary reserve currency, but its total, unchallenged dominance, that's probably going to fade. We're heading toward a more fragmented, multipolar financial system where other currencies and maybe even other assets start playing a much bigger role.
And that leaves us right here, with this one massive critical question. We've seen how the 50-year Fiat experiment unleashed inflation and debt. So what happens now, when that legacy collides with demographics, AI, climate change, and geopolitical rupture? What will the next 50 years bring? Honestly, the answer to that question is going to define the world for all of us.